Hello traders, if you're following my SPXL day trading plan or any trading plan that trades off the S&P 500, today was likely a difficult day for you as it was for me, but I'm going to show you why we really don't have anything to worry about at this point. This is just one single trade. We have tons of data looking back showing that this trading plan is profitable. So we're going to talk about that in this video. So this is the daily candle. This is SPXL, which is a 3 times leveraged ETF that tracks the S&P 500. If we pull up SPX, it's going to look virtually the same. I'm just kind of zoomed out, but you can see here, these are the daily candles of SPX, and let me scale it similarly. And now we'll go back to SPXL, and you'll see that it looks pretty much the same. So anyway, this is today's trade. We were filled because the market gapped up and it opened up much higher than yesterday's high. We were filled at 98.97. These trades are all automated. They're all based off of my trading plan. I don't physically place these trades. I just put the orders out there, and the orders either get filled or they don't, depending on the price action. The only thing that I do is place the orders where the trading plan tells me to place them. So there's no emotional input or any, boy, I don't know if this is a good day to be trading or not. For me, everything is very binary. It either is or it isn't, and I just do it, and I track the results over time. We've now taken 158 trades, so that kind of gives you a little bit of backstory. But this is the trade from today. We were filled at 98.97. Our hard stop was hit at 95.38. Again, all of that was fully automated. And then all my job is at the end of the day is to record the data. And we'll look at that now on my spreadsheet. I can show you the account data as well. It's not going to be as meaningful, but here is the cumulative P&L, and I'll explain why, because I've been adjusting my share size throughout the year as my account grows. If you look at my total account value, you can see how much account growth, and that's primarily due to deposits. You can see the P&L is only right now, after today's decent sized loss, is down to $47. It was up over $90 just a couple days ago. So this is a huge loss, but it's all relative. It's relative to the share size that we've been trading. The losses and gains that we have now are going to have a much greater impact than the losses and gains that we had in the first half of, or I should say the first, I guess, quarter of the year. So, and then if you look at my year periodical P&L, you can see here that we were green all the way through the year, and we were green up until yesterday with July. And again, this loss looks huge compared to some of these gains because we are trading with a little bit larger share size now as the account grows. So hopefully that makes sense. Let's take a look now at the P&L curve on my spreadsheet, because I think this is a little bit more helpful than this, because this shows you a one single share size P&L curve. So this is not influenced by the change in the number of shares that I trade throughout the year as the account grows. So this is a little bit more reflective, or actually it is exactly reflective of the trading plan itself. What is the trading plan doing with the current market conditions? And this is obviously today's trade. Actually, I think today's trade starts around right here. It's a little bit difficult to see, but yesterday was a small loser. I think we ended up down here. And then today, now we are down to 774 and P&L. That's profit per share. That's just for one single share. But what I want you to consider, even though if you look at today's trading and think, wow, maybe this plan doesn't work, or maybe I should stop, or whatever trading plan that you're trading, I would suggest that if you have data to back it up, and what you're looking at right now is just this year's data. I have over, like, I think 16 or 18 months worth of data, including more real trades previous to this year and back testing that was just pure back testing from the beginning of 2022. So there's a lot of data that we have to go on that shows us that this plan is profitable. So we should not be dissuaded by one single bad day. And for an example of why we shouldn't do that is, let's just scroll to the left here, and I want you to stay focused over here on the P&L curve. And imagine, so this is the beginning of the year. We started off red. We started off losing, and then we started, and nothing changed. Let me just be clear about that. From this point to this point, nothing in this trading plan has changed at all. We're still doing the exact same thing that we were doing back here throughout this whole P&L curve. So that has never changed. The only thing that's changed is the market conditions and the fact that the P&L is compounding over time. That's it. So anyway, so obviously if we go back here and we look, this isn't looking very good, and then all of a sudden, we see the P&L curve start to go up. Okay, everything is looking great. It looks like this trading plan is going to work. This is all me just kind of being thinking hypothetically if we could go back in time and we didn't have any other data to base things off of. And then you see this dip, and okay, a little bit scary, but not too bad, because we've had all of this P&L gain so far, and we go up even better. And now we see a huge dip, and we notice that, wow, this is about half the gains that we've had on the year, if we don't include kind of the regains that we had to get to come out of this hole. If we just look at from here to here, this is about a 50% retracement, and that's a lot. That's kind of scary if you're thinking emotionally and you're just kind of looking at the moment instead of the big picture. And by that big picture, I mean all the data that we have. We had a ton of data before this point, and if again we're going to scroll forward and we'll just see kind of the what plays out. So again, because we didn't stop, we got to see all of this happen, and we hit all-time highs at this point. And then, another dip down, again, maybe a little scary, but you can see that we got right back above it, and now we broke out. I think this is around May. We can look at the spreadsheet a little bit deeper to find out. These are just trading days here, not the dates. I probably should change that at some point, so this is a little bit more meaningful to you. But anyway, you can see how here we broke out through the previous highs. Remember back here we were thinking, wow, maybe this isn't working, maybe we should stop. But because we didn't, we got to realize the gains that made us break out through our previous highs. And again, nothing changed from this point to this point. We kept doing the same thing every single day with this trading plan. And then as we go on and again, this is not influenced by the account growing. It's not influenced by taking on more shares or less shares. This is a one-to-one ratio here of shares and P&L. And again, new highs again. New highs again. Only because we're allowing these drawdowns not to scare us. And why am I not scared? Because we have statistics, we have data that tells us to keep trading. And now here you can see we've been kind of hovering around trading sideways, and we finally broke out through all-time highs, again, only because we powered through all of that sideways trading. And then here we are today. We've come down to this $7.74 per share point, but not too long ago, those were near our all-time highs, 878, 771. So we have retraced all the way back down to roughly this point here, but we just have to keep doing what we've been doing, because you can see that, overall we are still making money, we are still in a trend, and we have so much more data than just this one day. This one day is what's known as a statistical anomaly. And in statistics, you really want to disregard those, even though in the short term, like today, they can feel kind of painful and sad that, hey, we've given up these gains, but this is just one single trade. So I urge, if you are trading this trading plan, to continue to do so, but be mindful, be careful. You should only be trading one single share until you've taken 100 trades and proven it profitable for yourself. If you've already gone beyond that and you're taking multiple share trades, I suggest to scale your position size with your account size. That's what I do. Right now, because the account is still below the PDT level, we're only trading with 1/3 the account size. So as the account drops down, then the share size reduces automatically, because I'm only trading 1/3 of my account size. So anyway, that keeps you from blowing up your account. So hopefully this video was helpful to you. I felt compelled to make it. I don't normally make these kind of, mid-month or before the end of the month updates, but today was a pretty unusual day. But again, we have seen pretty massive drawdowns before, and we have overcome those drawdowns, and I think today is going to be just another one of those examples that we can look back on in the future. So I'm just going to keep doing exactly what I've been doing. Have all the data to prove that this thing works over time. This is just a little speed bump that is kind of part of the market conditions that we're in. This sideways trading that we saw today, or actually this whole week, is very kind of difficult for this trading plan to overcome, because it gets triggered a lot into days where the price falls lower. I'll just say that much. But again, we are we have enough data to support that this thing works over time, so we can't let one day stop us. You can see all the trades that I make. All these little blue dots are all the trades that I've made throughout the year. So anyway, again, hopefully this video was helpful to you. If it was, hit the like button. If you have any questions, if you went through the same thing I went through today, you know, with this decent sized loss, let me know in the comment section below and how you feel about this going forward. Are you going to keep on and believe in your statistics and your data, or are you going to be swayed by the emotions of one single trade on one single day? Let me know in the comment section below. Love to hear from you. Thank you for watching, and thank you to all my Patreons who continue to support me on Patreon. That is where this trading plan can be found if you're interested. That's tradingarmor.com/, sorry, that's patreon.com/tradingarmor. I always flip that. But as always, you should have a plan for every single trade, or a trading plan that tells you exactly how to trade every single day, and you need to stick to that plan every day. Never break it. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.